Gonzalo Cañete is already with us on the other end of the phone from London. How are you, Gonzalo?
What's up, Alba? Good afternoon.
Gonzalo Cañete, ATFX Connect's chief strategist. And we are going to see a little bit of the summary of the hot stopping session we had on Friday, in which the dollar was knocked down, but now it is reviving. It actually held a lot of support, and then it rallied. We have been watching it on the program. Now we will discuss it a little bit more in depth with you. Tomorrow we will have U.S. employment data and retail sales. So let's go ahead and comment on the CPI data that we had yesterday and how this is going to affect the dollar. Is this going to affect the dollar? Is this helping it to survive, or is it fighting against the wind?
Well, I give it another boost again. Also, on a technical level, notice that it was the release of the inflation rate picked up again, which was not expected either. And let us remind the audience once again, since November, the inflation rate has not decreased. We are at 3 and a bit, 3.13. And so we continue. That is to say, we are getting, whoever wants to see the graphs, there is a clear decrease in inflation until the summer of 2023. Since summer 2023, inflation has not gone down. It has remained stagnant in the region of 3%. In the United States, something very similar also for Europe. Therefore, inflation is not falling here, and rightly so. One of the indicators for people to also take a look at it later at home, if they want to, or if they listen to us driving from the car on the way home, or if they are at home, they take a look at it. I always say it the other way around, the CRB or the CBR. I don't know if it's the Commodity Bureau Research or the Commodity Research Bureau. The commodity index is one of the oldest ones out there. It's starting to show you signs that it's rebounding as well. We're going to put it out here, see if I can see it, and then I'll give you some reference. But it's starting to show signs that raw material prices are rebounding. Even one thing that I shared on social media a little while ago, it was showing the freight of ships, which I have also looked at Dry Baltic, and it does not match, but the freight of ships had also shot up in costs, in prices, which obviously shows us that this inflation that was occurring. Look at the Commodity Research Bureau, that index since the 1950s, one of the oldest raw material indexes, which is usually an indicator of possible inflation, is at 320. And the highest level it reached, just with the hyperinflation that we saw, led us to give an exact figure of around, it reached 344 in 2022. And we are at 320. That is, we are not so far from those levels it reached during the worst moment of hyperinflation we saw. That inflation that reached, in some cases, as in the case of the United Kingdom, up to 2 digits. Therefore, this movement is very interesting because it is frightening, because, of course, it is moving away from the possibility of a rate cut, which was initially said to be for March, and now it is being discussed whether it will be for June, for July, and so on. It should not be forgotten that the United Kingdom is a little more similar to the economy in the US, but not in everything. On the issue of economic growth, for example, the UK is also in big trouble. The latest rate that growth has shown for Q4 of last year is minus 0.3%. The US is still growing. The UK is not growing. The UK is facing a scenario more like Germany. Germany is in recession, obviously. Therefore, I say it again, from the fundamental point of view, and although I say it because it is not really mentioned, you see that then punctually some in the United States are talking about this, which is if the growth rates are low, you should expect a rate cut by the European Central Bank or by the Bank of England rather than by the Federal Reserve itself. And, quote, but the Lagarde is not moving.
But Lagarde is not moving forward, and the UK is one of the last banks that plans to make a move as well. The Bank of England already said it was going to wait to look at everybody in front of it.
And if it were up to the data, we would know that they would probably have to go first. In fact, one of the things I commented at the beginning of this week was precisely that this is not a speculation that I am launching, but you had, for example, one of the most classic old school economists in the United States, Larry Summers, also a market analyst, who had even proposed what would happen if the Federal Reserve had made a big mistake and there was not even a possibility of cutting rates this year, in the year of the year. And this was raised by Larry Summers. In other words, it is not a question of playing the lottery and saying, no, we are going to go against everything that is being said, and we are going to say that there is no rate cut by the Federal Reserve. But some economists in the United States are already suggesting that this is the current scenario. There would be no rate cut this year by the Federal Reserve if we do not have a rate cut this year. By the Fed, if we go by the data.
He is not the only expert who has commented on this. I have heard it from other experts, but it is true that Powell, just this past week, what made the Fed rejoice was that the Fed would not cut rates this year if we stick to the data. What made the markets rejoice is that he said that he was going to make that cut this year.
Yes, but he has been
We
saying
have
that for 2
said it
months now. That is to
before.
say that, and so far we see that he is not able to set a clear date. And well, as we
Yes,
have
yes,
also
that's it.
mentioned, Kaskaris was the one who said that he has put for 2 rate cuts this year, and he said at least one. But look how they are changing the discourse a little bit. In other words, we were talking about that when all this started to be mentioned back in November and December. They were talking about 4 rate cuts, 65 basis points.
And stock markets are rising as if there is a QE and as if rates are already being cut. They don't listen. That's why we like to discuss this with you and be able to see who is lying and what is true.